Yes. So if you rewind and remember our previous class, we had identified what makes a lease, right? Because sometimes what happens is even a service can be masquerading. I mean, service can easily be masqueraded as a lease. So what differentiates a service and a lease? When would there be a hire or when would there be a lease component is what we discussed in the previous class. So what makes rental a lease? The asset should be identifiable. Now, what does it mean? It means the supplier should not have substantive substitution rights. No economic benefit should arise from substitution in case of any, and the asset is capable of being analyzed independently. We checked about substantially 90% of the asset should be used for your thing. Is the customer, and the second thing is you should have control of the asset. Okay, what do you mean by control? You should have substantially all the economic benefits from the usage. There are two things, from the usage as well as ownership. We discussed all that last time. Then the customer has the right to direct the use of the identified asset. So lessee decides how to use it. The use may be predetermined by the lessor, but that's okay. But even after that predetermined use, that is whether to use it as a commercial or a residential, to take an example, we decide how to use it as a residential. What becomes where do I put my bed, where do I put my sofa, where do I put my TV, I decide. Okay, it is not, those things are not predetermined, only the general nature of the property is predetermined. If that is very clear to you as to how you can categorize a lease, is there any doubt in these? Like, these are things we discussed last class. Any doubts? How to identify a lease? I think we went inside quite well. Any doubts on what makes a lease? Yes. Okay, fantastic, Sahil. Now we also discussed, then we went into the accounting aspect. So now that you have identified that this is a lease, what do you have to do? First, we will try and look at the lessee accounting. Correct? Who's a lessee? Lessee is the person who hires the asset. Correct? So, uh, he has to do what? He has to recognize a right of use asset and a lease liability. Correct? Now, what goes into the right of use asset? Right of use asset, you have to take the lease liability, then payments made before the commencement date, initial direct cost to bring the asset to its present location and condition, and whatever discounts you have to reduce. So basically the lease liability plus any direct cost minus discounts. So this is similar to IFRS 16 recognition. This is how you record the right to use asset. But the main thing is to find the value of right to use, you have to do you have to find the value of lease liability. Now, what is lease liability? Lease liability is the sum of all these, and we are, I mean, the present value, the sum of the present value of all these things. Okay, fixed lease, variable lease, residual value guarantee. If there is a purchase option, the exercise price of that option, if there is reasonably certain that the lessee is going to exercise, that is I is going to exercise that option, and also penalty paid for termination of lease. This is how we initially record. This is where we stopped last time. Correct? Is there any doubts on this? And also one more thing, right of use asset has to be depreciated. We also discussed what is going to be the useful life of depreciation if you are taking a straight line approach. We told that, like, what is the cancelable period, so non-cancelable period plus lower of right to use, or the lease term, whichever is lower. Okay, so after the non-cancelable period, what is the remaining useful life or the remaining lease period? If it is reasonably sure that you will continue after the cancelable non-cancelable period, then what is the lower of both shall be the useful life. It will not be the useful life as per IAS 16, where you take the useful life of the asset. Okay, I hope these things were clear. These were very very much discussed in the last class. Now let's go forward. Is there any doubts on initial recognition of a lease in the books of a lessee? Are you clear with initial recognition? Yes or no? Okay, fantastic. So the initial recognition is clear. Now you tell me, how do we How do we do the subsequent recognition? See, first of all, we have to understand that ROU asset, there are two things, right? ROU asset and a lease liability. So ROU asset, first thing that we do is we have to see whether we have to take a cost or a realization method. Okay, whether we have the option to choose which policy to use. If the ROU asset is an investment property, then we have to take it at fair value, right? Now, what about lease liability? We have to deduct fixed lease payments and add interest cost. We have to find a loan amortization table, because whatever lease payments that we are making, we would be splitting it into two elements. One would be an interest element, an interest cost on the lease, and also a reduction to the principal portion of the lease. Right now, we've also studied in the corporate tax that this interest which goes into the lease liability is also to be included in calculating your 12 million threshold. You remember all that, because it is a direct application of IFRS. Okay. So you tell me, in subsequently, after I recognize the ROU asset as well as the lease liability, what would be like, the entries that we do generally? First thing is we will find the depreciation. We will find the depreciation. Correct, whether it is a realization method or a fair value method, sorry, realization method or cost method. In case of a PP, we have to find a depreciation. Correct. Now, if the tenure for realization has happened, we have to find the fair value. Fair value adjustments would happen in case if it is an if it is a investment property, as well as if you are taken realization method. Okay, and the tenure for realization has hit. These are the subsequent recognition adjustments that could come on the asset. And one more subsequent is so you're not going to sell the asset, right? It's an ROU asset. So there is no question of sell. You can kind of sublease, but let's not go there. But generally, these are the two subsequent recognition entries that will come on ROU asset. Yes or no? Is there anything else that would come? Yes. Impairment can also come. Yes, you're absolutely right. There could be an impairment also. You have to check for impairment. Right. Well agreed. So this is also, these are the subsequent, recognition. These are the entries for subsequent recognition which could arise. Now, what about the lease liability? What do you do? You have to first find what? You have to first break the lease payments into interest cost. You have to consider the interest cost, right? And then the remaining, let's say the total payment is 1,000, interest is 300, remaining 700, what you do? You reduce from lease liability, right? So reduce lease liability in the proportion of principal payment. Yes, these are the subsequent recording that could arise. Yes or no? Pretty simple logically, but while doing a question, they could give you a little bit of googlies, so that we will discuss. But apart from that, is the logic clear? What is going to be the subsequent recognition? You have to do an interest cost. You have to you have to kind of recognize an interest cost, and this interest cost will come in SOPL, right? And the lease liability reduces, and also bank is reduced because you're paying an amount. Okay. Now, this is initial recognition, IR. Then there is subsequent recognition, SR. And then there is what? There is one more key important thing. There is presentation, PR. Now, where would you present the ROU asset? Is it with PPE, or can you do ROU asset separately? Yes. Where do you present ROU? Is it with PPE? Yes. Let me see the answers. Okay, he says NCA. That's okay, but what about, is it added in with PPE? You see, NCA can be a lot of things. Like your investments can be NCA. You could be any kind of assets which would be NCA. The under NCA, what? I mean, where would it find? Where would I get it? Yes, Sahil. So it would not be part of PPE. It would be separately called as ROU. Now another question to you in presentation. What if I have five properties? Okay, I have taken on lease five buildings. So for, let's take SUN for example, we have 1501 to 1504, right? These are separates. If you look at the lease contract, you would have separate for 1501, 1502, 1503, 1504. Okay. Now, in terms of ROU, can I show it as, do I show it separately for each block, or do I show it as one ROU? Yes. Do I show it as, for each lease contract, I'll show an ROU asset, or I'll show only one combined? Yes. Okay, each one separate. Yeah, how it goes is like, you can decide, right? So if you take, SUN example where it is 1501 to 1505, it is basically the same thing, one and same thing, commonly used, very connected. Each one is needed for each. So you can show it as a cumulative ROU. Okay, you can show this ROU cumulatively, and even though you have to kind of break it down, like depreciation, fair value adjustments, and impairment has to be done separately, but for presentation sake you can show it as cumulatively one. But if there are like, two different properties, I have one house in Sharjah, which I took for lease, and I have one house in or I have one factory building in Al Quds. You can't combine it. It does not see, make sense to combine, so that you have to show it separately. Yes. Are you okay with presentation? So you would be showing under non-current assets separately, and also you have to see whether you have to aggregate ROU assets or you have to show it separate. Yes, which would result in a better. See, if I from for 1501 to 1505, if I show separately, would it be doing anything good to the reader of the financial information? What they would be liking to know is what is the cost of my rent, right? Which is direct cost in doing my operations. Would it make any sense to him if I separate and show? Would it kind of do any good? No, right? So we will combine. But sometimes, let's say that the staff quarters is on lease, and the building premises is on lease, then it makes sense to separate them, because staff quarters is secondary. I want to know what is the direct cost which I'm spending on rent. Okay. Yes or no? You should understand the logic, then it's very easy to learn. Otherwise, it's a little difficult. Did you understand the logic of presentation? Okay, fantastic. Now let's see what is mentioned there. As in, like, what is the, too many things are given here. Yeah. Can you see this in the statement of SOFP? Right of use asset can be presented on a separate line under non-current assets, or they can be included in the total of corresponding underlying assets and disclosed in the notes. Okay. Lease liability should be either presented separately from other liabilities. Yeah, lease liability we didn't discuss, but it's not so tricky. It is either presented separately from other liabilities or disclosed in the notes. IFRS 16 does not specify that lease liability should be split between non-current and current liabilities, but this should be done as a best practice. Obviously, what is the only presentation thing that you have to take care of? Lease liabilities, it would have a current portion and it would have a non-current portion. So you have to split between current and non-current. That is the only thing that you have to take care while presentation. Okay, is that clear? Like, how to present? So in lease liability, we would be presenting it in non-current liabilities and current liabilities based on the split. Okay, because lease liability, a portion would have a current liability because we will be paying the next year lease payment, and whatever which will not be covered in the next year's lease payment would be non-current liabilities. You're okay with presentation? Did you understand initial recognition, subsequent recognition, presentation? Let's do one question. Yeah. Why don't you open your Excel also so that we can try together? So let's do a question on, subsequent recognition. Sorry, on recognition on leases. So can you see the question? Is it clear? Yeah, can somebody read? Yes. Who's going to read?
No. Hello?
Yes, yes, please go on.
Lessee enters into a 10-year lease of a floor of building. Lease payments are Cu 50,000 per year, payable at the beginning of each year. To obtain the lease, lessee incurs initial direct cost of Cu 20,000, of which Cu 50,000 related to payment to a former tenant occupying that floor of the building, and Cu 5,000 relate to a commission paid to the real estate agent that arranged the lease. As an incentive to lessee for entering into the lease, lessor agreed to reimburse to lessee the real estate commission of Cu 5,000 and lessee's leasehold improvements of Cu 7,000. Discount rate is 5%.
Yes. So we have to account this. Okay. So while accounting this, what is the first thing that you will do? We just now discussed how you will account this. What is the first thing that you will do? What is the first thing that you would account? What is the hierarchy or the chronology of things? First, what do we have to find? Yes, we have to do the initial recognition. Fantastic, Sahil. That's so. Let's do initial recognition. So, what is initial recognition? Can I do the initial recognition of ROU? What are the contents of initial recognition of ROU? What is the first thing? What is the first thing? What is the first thing that you have to? How do you calculate ROU? What is the first element of ROU? Opening balance of lease liability, and it means the present value of lease liability, right? Now we have to find present value of lease liability to find ROU. So first we will do that, right? Makes sense to do that. Present value of lease liability. Now what is present value of lease liability? We know it is present value of future interest or future lease payments, correct? Now if you see, let's see, enters into a 10-year lease, so it's a 10-year lease. Okay, that is a lease term. Lease payments are 50,000 per year, payable at the beginning of each year. Okay. To obtain the lease, lessee incurs initial direct cost of 20,000. That's all fine. But the key word here is it is payable at the beginning of each year. Okay. So that means in year one. So so 1, 2, 3 to 10 years. Okay. Now, what is the lease payment? We are taking the present value of future lease payments, right? What is the lease payment? What is the lease payment? Lease payments are 50,000 payable each year. Okay, this is the lease payment. But they've also provided that it is payable at the beginning of each year. So that means for the lease of year one was paid in 1st January itself. Now for calculating lease liability, do we take what is paid or do we take the present value of future lease payments? We take the present value of future lease payments, correct? So the first year it is already paid. So it is not some payment which is accruing in the future. For the rest of the period, he will be paying 50,000. Yes or no, right? You can ideally say this is 0 and this is 1, 2. Are you getting the point? If it is in advance, that means for the next 9 years, I will get 50,000. Okay. The interest rate is 5%. So what is the discount factor? How do you find the discount factor? Is 1 divided by 1 plus 0.05 whole raised to this, right? So if I drag down and I will find the discount rate, right? So what is the present value of future lease payments? It's going to be this into, so what is the present value? Are you understanding this? Is it very clear? It's pretty simple. Yeah. Did you understand this? Because we are only finding for present value of future lease payments, correct? 50,000 was already paid. So what will I get in the end of the first year? As an advance, I will get another 50,000. In the end of year one, in the beginning of year two, I'll get another 50,000. So like that it will go. So instead of taking 10th year and in advance, I took 9th year and in it. Are you getting it? Is what is the problem? Can you just give me an S if you understood what I just did there? Yeah, it's pretty simple. So this is the present value of future lease payments, right? No, they have not given like anything else in the sense like is there any variable payment or is there any residual value guarantee or is there any purchase option? They're not given. They're just given the lease payments, which is a fixed lease payments, and we have found the present value of it. But you in exam you have to look for other things also, okay, where there is a variable commission, etc. Now this is fine. Now what is the entry that I will write? Okay. Before that, let's find the ROU. Now, what would be the ROU asset? ROU asset, I told you that the first thing in ROU is present value of lease liability. Correct? Present value of lease liability is how much? This one. Now, they have also said there are few other things. To obtain the lease, the lessee, that means me, I'm doing lessee accounting right now. Lessee incurs in initial direct cost of 20,000. So there is an initial direct cost of 20,000. Fantastic. Okay. Then of which 15,000 relates to payment to a former tenant. Okay. So tenant, the former tenant said to leave, I need this 15,000 from. Okay. And CU 5,000 relates to commission paid to a real estate agent that arranged the lease. So can you agree that the 20,000 is directly attributable to the lease itself? Okay, out of which 15% for the previous lessee and 5,000 for agent commission. So it's directly attributable to the asset, for directly attributable for getting the ROU asset. So we will capitalize it. As an intense incentive for to lessee for entering into the lease, the lessor agrees to reimburse the real estate commission of 5,000. So 5,000 he will reimburse and the leasehold improvements of 7,000. So there are discounts also. Correct? There is initial direct cost and then there are discounts. So what is discount? How much discount should I take? How much discount should I take? Tell me. How much discount should I take? Okay, why 12,000, Sahil? See, discount is always if I have recognized something and I am getting a cashback for that, then I will recognize. Correct. Now, I fully agree with you that this 5,000 commission which is paid to real estate, he is reimbursing back. Okay. But this 7,000, you tell me, did I incur 7,000 now? Was it a part of my initial direct cost? Then why should I subtract? Okay. Then if it is not a part of my initial direct cost, then I should not subtract it. The discount would only be how much? 5,000. Okay. Discount would only be 5,000. So what would be the value of the ROU asset? It would be 370. Yes. This out of which 20,000, 15,000 is for some tenant, the previous tenant. Okay. And 5,000 relates to. So we have taken 20,000 and only taking a discount of 5,000 because the 7,000 lease improvement was not a part of initial direct cost at all, or we don't have any information for it. So I cannot take it as a discount. Okay. So this is it clear, the initial recognition? See, what they will make it tricky is like, beginning of the year and, received in arrears or in advance. So these things you have to be very careful. If you're understanding the fundamental, they can never break you. So what they are saying in advance means, one payment is already gone. Now there is one thing which we missed. Okay. Total lease. There is also one payment which you already gave, no? One payment you already gave. 50,000 for 5 years. For lease liability, we have only taken for 50,000. There is one payment which you already gave. If you see here, lease liability payment made before the commencement date. This we didn't take. So what is the payment made before commencement date? It is 50,000. One payment was given in advance. Okay. So that I am doing it now. Yes or no? Okay, fantastic. Now this is initial recognition. Now let's go to subsequent recognition. How will the ROU be subsequently recognized? Found that the value of ROU is 420,391.08, right? How will this be recognized? How will this be subsequently recognized? Sorry. For that, we need to first find the lease term, correct? It enters into a 10-year lease. Is there any cancelable period mentioned? No. Is there any useful life of the building mentioned? No. So what is going to be the, the useful life of the asset? It is going to be 10 years. So there would be a depreciation subsequently for 10 years. So it is going to be the value of the asset divided by 10. 42,039 is going to be depreciated every year, right? They have not given any scrap value also, nothing. So I will take the entire thing and I will calculate depreciation for years to come for the next 10 years. Now, with respect to lease liability, what did I tell you? You first, the lease payments which you're making, you have to break it into interest portion and principal portion. And principal portion will be deducted from lease liability, and the interest portion would go on as an interest expense in your SOPL. Right? Now let's see how the computation of that is going to be. Okay, for the year. So let's see what year. So year 1, 2 to 10. Okay. Now, what is going to be the lease liability? What is going to be, so first there is the opening balance of lease liability. Correct? What is the opening balance of lease liability? I think I have done this here. Yes. In order to save time, I'm just taking. So this is the opening balance. Hmm? Then you have to first do installment, because installment is already paid. It's paid in advance. And after that, you're taking the. So in order to save time, what we do? So first year, would there be an installment? No, because the first year's advance installment was already accounted here, right? First year, there will not be an installment, which will go on to reduce because first year's installment is already recognized there. So what would be the interest? Hmm? Net amount is this minus this. And what would be the interest? This into what percentage? Hmm? We did a discounting of 5%. So it is going to be, yeah, just participate like how Sahil is doing. He's doing a good job. Into 5%. So I'll get the interest. Hmm? What is the closing balance? What is the closing balance? It is going to be net amount plus the interest portion. Okay, so the first closing balance is going to be 373. Why no installment? Because it was paid in advance. It was after, uh, you know, so if you take it in dates, this is the present value of lease liability is on which date? Is on 1st Jan, right? This 50,000 was paid before 1st Jan. Let's assume, or it was paid on 1st Jan itself. So 1st Jan is the present value of lease liability. Okay. And no installment has gone for that purpose. Okay. The net amount in 31st December is 355 only. We are calculating an interest and the closing balance. Now, next year, what is happening? The closing balance is going to be the opening balance, right? This is going to be 1st January of year 2. 1st January of year 2, you're also getting an installment. How much is the installment you're getting? 50,000. Yes or no? So, what is the net amount as on 31st December? 323. What would be the interest? So, what would be the closing balance? Right? So, if we kind of project it for the next 10 years, you will find that in the end of year 10, it would all be paid. Yeah. So this amount is what will go into where this amount will go to SOPL. This closing balance will go into your SOFP. Yes or no? Are you understanding? If I paid in advance, why I'm doing this? Be very little careful. Okay, so this is going to be the closing balance. Now I told you, like ROU asset you can do that, and in terms of presentation, ROU asset you can present in a way, but when it comes to lease liability, I told you have to do a non-current portion and a current portion. Correct? You have to account it as a non-current liability and as a current liability for the sake of presentation. Now you tell me what is the rationale for finding. See, this is the closing balance in year one. How would you split this into the other things? So the rationale, the funda is, what you do is, see, what is a current portion? We'll find the current portion first. What is current portion? Current portion means it will be paid in the next month. I mean next year, right? And what amount of liability would be reduced in the next year? It would be, what would be the installment that I pay minus what would be the interest which will be going. So this is the principal portion which will go on to reduce my 373. If you see 373 minus 379, yeah. So this is how my interest, this is how my principal is reducing. So that is made as current portion, and non-current portion is this minus this. So see, next year's non-current portion will be equal to the closing, the year one's non-current portion would be the closing balance of next year. And then we will do the same thing. Okay. Okay. So what you're doing is, what is the lease payment you're giving next year? You are splitting it, your lease payment that you're going next year, like, so what would be the current portion? Current portion would be the closing balance minus, or like, the principal portion on the next lease payment. And non-current portion is remaining. It's all about logic and fundamentals. If you see, this is where people struggle. If they understand the logic and fundamentals, it's very clear. Just remember, out of this closing balance in year one, how much will I pay next year? Okay, how much reduction will happen next year? That is the current portion. And the rest is the non-current portion. Yes or no? Did you get the funda? So to find this, instead of finding the whole table, what we do is we will take the next year's installment, reduce the interest portion which could come. So that would give me the principal portion which will reduce the next year's balance, right? So that I will reduce from my total balance, so that it would give me the current non-current portion. Did you understand that? How I did that? Yes or no? It's just a matter of logic. It's nothing to do with you know this is what people struggle in examinations and in life. Like, you see a lot of numbers, but it is not that hard. It's end of the day, it's accounting. It's just a plus or minus. You need to know what is the logic. What is the logic why we are doing all this? So that the user of financial information would help it. The presentation would go well. Now, if I say that the current portion is 33, okay, next year 33 would be reduced. Okay, so that is why we'll be doing. So that is going to be the subsequent recognition and also the presentation. Now, if you understood this, can we do one in the same line? Okay, this is for you guys. Just look at whether it is paid in advance or paid in arrears. If it is paid in advance, what you have to first do, it would not be a part of present value of future lease payments. So it would be a part of ROU, and rest of the things are going to be the same. So let's do this. Let's do an arrears part. Same thing, but in arrears. Okay. Can somebody read the question? Same question, only that it's arrears. Can you read?
Lessee enters into a 10-year lease of a floor of a building. Lease payments are Cu 50,000 per year payable at the end of each year. To obtain the lease, lessee incurs initial direct costs of Cu 20,000, of which Cu 15,000 relates to payment to former tenant occupying that floor of the building, and Cu 5,000 relates to a commission paid to the real estate agent that arranged the lease. As an incentive to lessee for entering into the lease, lessor agrees to reimburse to lessee the real estate commission of Cu 5,000 and lessee's leasehold improvements of Cu 7,000. Discount rate is 5%.
Fantastic. So, shall we do this together? The one I showed you. Shall we do this together? Okay. If you want, you can open your, take a screenshot of this and post in your Excel sheet and you can start doing, or you can listen to me if you want, because see, it's the same question. Only thing is what here it was paid in advance, right? At the payable at the beginning of each year. Here it is payable when at the end of each year. That's the only difference. So same question, if it is the end of each year, how to tackle? Let's see. Okay. So first thing what you have to do, first you have to do initial recognition. So initial recognition of ROU, you need initial recognition of lease liability, correct? So let's find lease liability here. Lease term is 1 to 10. So 10 years. Yes. Now, what is the future lease payments? Now, tell me one thing. This 50,000, it was not included in this one because why? It was paid then only, right? Here we are paying this at the end of the year. 50,000 we are not paying at the beginning of the year, we are paying at the end of the year. So isn't that a future lease payment, not a current lease payment, right? We are doing this on, let's assume that we are doing this on 1st January of the year. 1st January. Okay. Now, is this going to be a future payment, right? 50,000. So all 50,000 is going to be a future payment because we are only going to get it 31st December of each year. Right? What is the discount rate? If it is 1 divided by 1.05 whole raised to this guy. Okay. So what is the present value of future lease payment? It is going to be yes. So what is the total? It's going to be 386,086. Clear? Is this clear? Present value of future lease payments. That's all. Fundamentally. Okay. Only thing is in the advanced one, the first one was not in what's not payable. Not a future lease payment. So we have not, this is IRS. So future lease payment, everything is in the end of the year. So it's very clear. Now, what is the second step? We have to find the ROU asset, right? So what would be the initial recognition of ROU? Let's copy this and bring it here, right? Right. What is the present value of lease liability? It is going to be what we found out. Is there any payment made initially? No. What is the initial discount? Initial direct cost is 20,000 and the discount is 5,000. So the ROU is going to be 401. Only difference here is same question. Only difference is its advance is changed to arrears. Is this clear? Super. Now you tell me what is the next step? Next step, we have to do subsequent recording. I am not going to do the depreciation part anymore. That is at waste of time. But you understand. You have while writing the exam, you have to also give the depreciation part. Okay. Now let's go to the amortized cost table, right? Let's do that. So what is year? Okay. What is the opening balance in year one? 386. Yes. Any doubts there? So we are now looking at year one. And when are we calculating all this? We are calculating in 31st of December of year one. So opening balance is 386. Uh, we have to find the interest till 31st March also. So what would be the 31st December also? So what would be the interest on unpaid amount? It would be opening balance into 5%. Then I'm doing an installment. How much am I paying? 50,000. So what is going to be my closing? Closing is going to be opening balance plus interest minus whatever is paid. So I'll get a closing of 355. So I'll just, good thing about Excel is yes, clear. Now you tell me, why would I take interest before installment? Here I took installment and then interest. Correct? Now why? Because this installment was paid in 1st of Jan. This installment is paid in 31st of December. So that is why we are taking the interest first and then installment. Okay. In advanced cases, I'll just kind of see these you will not find in the books. Okay. I don't want you to struggle. So in advanced cases, what is happening? When am I paying the advance? So opening balance on 1120x5, let's say. I am paying the installment. Installment is also paid on 1120x5, right? And then I will get the net amount in 31/12/20x5. Then I will add that interest onto the net amount. Net amount as on 31/12/20x5. And then I'll get the closing balance. This is the advanced case. In arrears case, what is happening? Opening balance as on 1/1. Then when am I getting the installment on 1/1? No, I'm getting my installment only on 31/12. So I will first add the interest amount because it's unpaid. Interest on opening balance. Then I'll get a net amount. Then I will reduce installment, which will be paid in 31/12/20x5. And I will get the closing balance. You see the subtle difference here? Or there is no difference, only that, I'm just doing as per chronology. Okay, in installment amount, I am reducing to find the interest based on chronology. Okay, so chronology समझिए. That is what our central government also is in favor of. So, did you understand? Like, you have to account for advance and arrears. Only the chronology is different. Other than that, it's all fine. Yes. Super. Okay. Now, that is the That is the what is the subsequent accounting. Now tell me presentation. What could be the non-current portion and the current portion of the lease liability? You tell me. You tell me. Somebody unmute and tell me what is going to be the non-current portion and the current portion which we are going to account. I told you the logic, right? Because I am paying a lease payment next year, out of which how much is the principal reduction? That is going to be the current portion, right? So what is going to be the current portion?
So current portion is next year's installment minus the interest.
Next year installment minus which interest?
Second year's interest.
Okay, so that's going to be 32. So the non-current portion is going to be this minus
The
current portion.
correct.
Okay, are we right or wrong? Can we check right here? Can't we have a error, a trial or error, or the whether we are wrong or right? Right from this particular instant, can't we check? How?
Should match the closing balance of second year.
That's all. So, see, this year it is 355. 332 will be gone in the next year, and 323 will be carry forward for years after that. That is the presentation. Okay. So I'm just gonna do a dish. It will not come correctly after. Okay. So finally, there is an current portion of 47,619 and 47,619 is being paid. Okay. Is it clear the arrears and the advance? The people find it a little tricky. Simple, just go by chronology. Okay. If I am paying the advance first, reduce the, if I am paying the installment first, reduce the installment and then calculate the interest. If I am paying the installment at the end, calculate the interest till the year end and then reduce the installment. That is the only adjustment. Okay. Logically, fundamentally, this is the only thing. Yes. Okay. Now, this is one. Now, sometimes what they do is, what these guys does is like, to make you even more, to test your understanding or test your logic even worsely, even better. What these guys do is they will give a mid-year lease. Now, what does it mean? I am saying that I took the lease on 1st January 20x5 and I'm paying on 31st December 20x5, right? And this coincides with my financial period. But what happens is sometimes, my financial period is Jan to December, but I took the first lease on 1st May 20x5. So, in case of a distortion there, how do you find the non-current portion, current portion, and how do you account for the lease? So, that is a problem. Okay. So, if you understand the logic and fundamentals, we can crack that also. So, this kind of question is not there in the text, not there in anything, but I just pulled one up just because we should be clear tomorrow. And there are questions which are coming where the interest term, the yearly interest is not coinciding, or yearly lease year is not coinciding with the financial year. So in such a case there would be a problem. Let's do one question like that. Okay, so this may come. Okay, so that time don't panic, it's just a matter of chronology. So let's say that the lease started in 1st May 2020. Okay, and year end is 31st March. That is 1st April to 31st March, but the lease started in 1st May. Okay. Lease installment is 12,000. Present value of lease liability they've already given is 55,000. Okay, and it is paid in arrears, not in advance. So discount rate is 10%. Okay, so they've already done the initial recognition of ROU and everything. Now we just need to do the subsequent recording. Okay, so let's do this. And you answer me everything. Okay, it's not that right. So how many years it is not given? Let's assume that it is for 10 years. Okay, this is not an question, this is just made by me for. Yeah, what would be the opening balance? What would be the opening balance? Okay, when are we doing this? We are doing this in 31st March. Okay, so we are doing this in 31st March 20x1. Let's assume we are always be doing in 31st March 20x2, x3, x4. Okay, so let's stop there. Yes. Yeah, we are doing this in 31st March, right? What is going to be the opening balance of 31st March? You tell me. Why 55,000, Sahil? I told you I'm calculating this on 31st March. Okay. So for 31st March, if the lease liability should have an opening balance, then the lease liability should have been there when? It should have been there in 1st of April, right? So we started the lease only on 1st May 20x1. So would there be an opening balance? Lease was not existent on 1st April 20x1. So would there be an opening balance in 33 20x1? Or, lease was okay. Lease was taken in 1st March 20x0, 1st May. So what is my opening balance? Yeah, so it is not there on that period. It is not. So opening balance should be taken on 1st April 20x0. 1st April 20x0, I didn't have any lease. So opening balance is 0, right? And what is the current year development? That is going to be 55,000. Correct? Now, I told you that it's paid in arrears. So interest would be paid only when? When would the interest be paid? Or sorry, the lease payment be paid? Which date would the lease payment be paid? Tell me. When would the lease be paid? End of the year. You tell me the date. I mean, since we all have the dates, when would the interest be paid? It's given on the question that it is paid in arrears. So when would the lease payment be paid? Lease installment of 12,000. When would it be paid? The first one. At what date? Yes. Yeah. It will not be paid in 31/3/20x1, Sahil. It would be paid in 30th April 20x1. Why? Because the lease period and the year end is different. Okay, my first installment is not due on 31/3/20x1. It is due on 34/20x1 because the lease term is ending, the first period, the year is ending in 34/20x1. Yes. So, what is going to be my interest? Interest would be calculated for how many months? Interest would be calculated for first May 20x0 to 31st March 20x1. So that would be 11 months. So it is going to be 55,000 into 10% into 11 by 12 because I'm only paying for 11 months. This is going to be my interest, right? This is going to be, am I paying for the interest for 1 month? No, right? Because the lease started only on 1/5. So there is no interest for 1 month. And what is my closing? Net closing, net amount is 55 plus this 60,000. Installment, am I paying any installment in 31st March 20x1? No, I am paying my first installment only in 34/20x1. Okay, so I'm not paying any installment, then also it will be 0, and the closing balance on 31st March 20x1 is going to be this minus this 66. Is it clear? So it is a little tricky. You have to go by the, now let's do the second year also. What is going to be the opening balance? Opening balance is going to be the closing balance, and this is on 31/3/20x2. Okay. Is there any current year development? No. What is the interest that I will be charging? Now again, there is a trick, because this 1 month interest, right? 1 month interest would be charged on this amount, the previous amount, because that is when we are paying the 12 months. So this 1 month is, see, what I'm trying to say is from April 1st April to 30th April, right? What is the interest that I'll be charging? I'll be charging for this amount, correct? So whatever I left out here is being charged for April to, then from here it is going to be what? You paid an installment also. Are you getting the chronology problems here? You paid an installment also. How much? You paid 12,000. This was paid when? This was paid in 30th of April, right? So what was going to be the net amount? Opening balance plus interest till 30th April minus installment paid on 30th April. Net amount is going to be 48,500. Okay. So what is the interest for the next 11 months? Is calculated on this. And what would be the closing balance? It would be the net amount plus. Are you understanding this? I'm just going by the chronology. When the interest was taken, what would be the interest for the next 11 amounts? This 11 is from when? 1st May to 31st March. Installment is always paid on 30th April. So you have to see the chronology, and before the installment is paid, take the interest till then and then close and go. Are you understanding all these? If the, I know this would be a little tricky, but if you kind of like, you want me to repeat that? You want me to repeat that one more time? Yeah, I'll repeat. So let's kind of clear everything away. Okay. Okay. So in 31st March 20x1, is there any opening balance? Now you answer me. Is there any opening balance? No, Sahil, it won't be there because the lease started only on 1/5. So there won't be any opening balance on 1420x1, right? So there is no opening balance. Okay. Now, so opening balance here, write the dates also, so it's very clear. So opening balance, what are we talking about? Opening balance, we are talking about 1, 4, 1st April of each year. Okay, we will just do this. 1st April, is there any opening balance? 1st April 20x1? No. Current year development? Yes. So that was in when? 1st May, right? Current year development was how much? We'll take 55,000. That was the present value of lease liability, right? Now I have to calculate interest, right? So interest till 31st March. I have to first calculate interest till 31st March. So here my lease was taken only on 1st May, not on 1st April. So first I'll have to calculate interest for 11 months, correct? For this year, the interest would only be for 11 months because my year end is 31st March and I took the lease only on 1st May. Are you understanding? Yes or no, chats? Okay. So this year, I would only give a 11-month interest into what is the discount rate? 10% into 11 by 12. So this year only 11 months interest is there. Okay. What is the 1 month interest? That is from 1st April to 30th April, which which went into the next year, right? So in 1st April to 30th April, is there any interest element? No, because lease was only taken on 1st May. So for 20x1, 1st April to 30th April, there is no lease. There is no interest. Only 11 months interest would be coming. So it would be 0. So what would be the net amount? Net amount is opening balance or the on 1st May plus interest till this date. Net amount is going to be are we paying any installment on 31st March? Am I paying any installment? Am I paying any installment? No. Right? Because my installment is payable when? It is payable only on 30th of April. Right? Yeah, okay. So I am not going to pay anything and the closing balance is how much? It is going to be 55,000, which present value of lease liability on 1st May plus interest. No installments were paid. So this is going to be my closing balance as on when? 31st March. Okay. So installment, let's pay only on 30th April, right? So in that 30th April, we didn't pay any installment, so it is not there. Are you clear about the dates now? Now you tell me in 20x2, we will go line by line what is going to come. So what is going to be my opening balance? Would I have an opening balance on 31/3/20x2? Yes. Yes. What is my opening balance? I need you guys to give in the information. Otherwise, we will not understand because it's a little tricky. It's a little mathematics, nothing else. What is the opening balance on 1st April what is the opening balance as on 31/3/20x2? What is the opening balance? 60,041, which is closing balance of absolutely, right? Am I doing any current year development? No. Now, what happened after that year? After 1st April, what all things happened that year? So I should pay an interest of for 1 month, right? In this year, I have to account that interest of 1 month that is trickled down from the last year. Hmm? So for 1st April to 30th April, I will record the interest. So while taking interest, what would be the we will take only this, because this into 12 months is trickled down 11 months in this year and 1 month in this year. Okay, so this into 10% into 1 by 12. Now, if you see 55,000 into 10% into 10% is what we have to do, correct? This is the first year interest. But since our financial period was different, 11 months interest, what is 55,000 into 10%? It is 5,500, right? Out of which 11 months are pertaining to 1 year and 1 month is pertaining to another year. So that is why if you see 5041 plus 458 is what? 5,500. We are just kind of segregating it. Okay. Now what is going to be the net? Is there any other transaction that happened during the year? Let's come by chronology. 1st April, there is an opening balance. Okay. 30th April, there is an interest addition for 1 month. Then 30th April, I'm also paying the installment. How much is the installment? 12,000. What would be my net amount? What would be my net amount now? Net amount is going to be net amount as on. Is there any other transaction before 31st March? So this net amount is also 31st March. Okay. Is there any other transaction before net amount? No. So what I'm going to do, the net amount is opening balance plus interest for 1 month minus the installment which happened in 30th April. 48,500. Now I have to give the interest for the next 11 months also, correct? Because it's due on 31st March. I will not take this interest because it's already paid in this installment. So what is that remaining? That would be net amount into 10% into 11 by 12. So this is pertaining to the interest from 1st May 20x2 to 31st March to 1st May 20x1 to 31st March 20x2. Those 11 months is going to be 4445. This 1 month is previous year's net amount, interest, and what is going to be my closing balance? Net amount minus, plus interest amount. So 52,945 is going to be my closing balance. Are you getting it? We just didn't do anything. We just split two things. Okay. So let's do this year also. This year you tell me. Now you tell me. Okay. You unmute and tell me what to do. What is my opening balance? What is my opening balance? I want somebody to unmute and tell me so that, we can, in case if you're wrong, we can correct it then and your understanding is clear. What is the opening balance on 31,320x3?
Closing balance of lab.
What is that number?
52,945.
Okay, that is going to be 52,945. I am not taken a new lease this year, correct? So this is going to be 0. What is my, so now I've come to what? 30th April. I've done 1st April. Now I'm come to 30th April. 30th April, do I have to give interest on that leftover 1 month? See, this interest is only for 11 months. So I would have to do that 1 month interest. What would be my 1 month interest amount? It is going to be the net amount of the previous one. Okay, into 10% into 1 divided by 12. You can alternatively see whether this 4445 into this is 11 months interest, right? So if I give 1 divided by 11, I'll get the same amount. So that 1 month interest, I'm just trickling it down to the next month. Okay. And I'm also paying an installment of 12,000 on 30th April. Correct? So what is going to be my net amount? Net amount is going to be net amount as on 31st March is there are no other transactions. So opening balance plus interest for that 1 month minus installment paid on 30th April. Remaining is 41,350. And what would be my interest? Into 10% into 11 by 12 because 11 months has been happening here. So what is going to be my closing balance? It's going to be net amount plus interest for 11. So this is how you would have to do it. Okay. You have to go by one simple fact, which is okay. Go by chronology, account on chronology, like you'll understand, you'll get it. Yes. Yes or no? See, this is not there in textbook. In case of a question comes like this, it's only about chronology. Okay. And you may have to do this. You just have to understand what is the interest till then and then clarify. Now you tell me there is one more complication. You tell me there are for presentation sake, we have to find the current portion and non-current portion. So what would be the current portion here? How do you find the current portion? I told you current portion is what results in a decrease in my liability, right? So what is my next year, next lease that I'm going to pay is when, sorry, next payment that is going to be on, that is on this, right? Okay. So what is the interest portion did what is the interest element that comes into the picture? Interest element is both this and this. Out of 12,000, the interest is this, right? So this is going to be the current portion and the remaining is not going to be the non-current. $458 plus 5,041. Yes, you're right. You're right. So that is the only trick that you have to do. Now you will ask me, this is not tallying. Why? That's because see, 31st March, the current portion is only till next 31st March. So there are like 2 more months coming in. They are not expecting you to do all those adjustments, but I'm telling you, see what is current portion? What would be paid till 31st March 20x2? Right. If it is in the same year, we can kind of attribute it. But if it is in a different year, we have to see this interest into whatever months is pertaining to this and that. So let's not go there. This would be more than enough for the examiner, and the non-current portion is going to be this minus this. Yes, that is the logic. That is a fundamental logic. Okay, you may ask why, sir, this 53 and 52 are not matching. That is because, my dear, 1 month interest is reduced. Okay. So if you kind of see the next 11 months is only 4445.83. That would be there, but don't it is like then you have to bring it on that 1 month interest also you'll have to bring it on. So that's just a notional thing. So just leave it. But this is how you have to tackle mid-year leases. Okay, very important. And the only thing which will you help you in lessee accounting is chronology. Okay, so this is lessee accounting, and that's what we did. We'll not be going and reading because it's the same thing. But if you see, lessee accounting is all about that. Only trick is like, the initial recognition, subsequent recognition, everything. Only trick is like, when it is in advance or in arrears or a mid-year lease, just look at chronology and do it. Okay. That's the only thing that is a little tricky. Always look at chronology. Let's also look at lease and sale and leaseback and lesser accounting. Now, these are almost 90% of the whole topic. Sale and leaseback and lesser accounting is not much. Okay, it's pretty simple. I'll take you through the fundamentals of sale and leaseback. Okay, and then we will see whether we will continue or we will kind of find out. Okay, shall I go to sale and leaseback at least on the conceptual node of sale and leaseback? Shall I look at the conceptual node of sale and leaseback and close for the day? Yes. So it's nothing. We'll just look at both conceptually and tomorrow we'll come and do some questions. Okay. So what is sale and leaseback? Sale and leaseback is when when they say that I am selling you an asset and I am leasing it back. Okay. So that's a smart way so that, instead of why would I do a sale and leaseback? It's advantage. See, we are all tax professionals. End of the day, it's very advantageous for me on a tax perspective because see, it's the same asset. Instead of depreciation, since what I'm getting back is an ROU, I'll get a depreciation as well as an interest payment. Correct. So there would be two deductions instead of one. So that is the advantage I'll get if I do a sale and lease back, especially with a related party. So it's a quite advantageous one. Like, you sell and you give him it's a good shortcut for short-term money. Also, I have an asset, I will sell it to him, I'll get some cash, and at the same time I will lease it back to him so I can pay it in installments. It's good from a tax perspective as well as from a finance perspective to get a little bit of money in hand. So this is all about business, but let's understand how we will account it. So what does IFRS say is that, anybody has any doubts regarding what is sale and lease back? No doubts? So I told you from a tax perspective, you'll get a double deduction. If I had the asset, I would only had got a depreciation, but here I'll get depreciation plus lease interest, right? And also from a finance perspective, I can get some quick cash. Quick cash at the time of selling the asset, but I don't need to kind of like, reduce, no need to reduce operations as the asset is still there. So it's quite a good method. So how do we do the accounting? So IFRS, what it says is that whenever there is a sale and lease back, you have to look at whether control is transferred. Control of the asset is transferred. Whether the control of the asset is transferred. Okay. Now, how do you determine control is transferred? This is as per IFRS 50. And the risk and rewards and significant benefits associated with the asset is transferred to the lessee. Okay. He determines whether to burn it or whether to give it away, whatever. So if the control is transferred, then you have to record it as you have to de-recognize the asset. De-recognize an asset and recognize a lease liability and ROU asset. right? Control is transferred. That means the asset is his. So I will first de-recognize the asset, and there would be a profit also. So let's say that let's take a simple one. So let's say that I am have an asset with a carrying value of 300,000 or 30,000, and then it is sold for sale value is, let's say, 40,000. Okay, and I am getting it back. So now I am having an ROU asset, and the control is transferred, and the ROU asset after all the amounts is like, let's say that 35,000, and then there is a lease liability present value of whatever is the lease agreed is, let's say that 29,000. So how will I account? So first there is a bank debit. How much is a bank debit? I'll get the sale value of 40,000. Yes. Now I would also like, ROU asset. There is a 35,000 ROU asset which will be like coming. There would be lease liability, which would be credit, would be 29,000. Also, I would de-recognize the asset, right? PPE credit would be how much? 30,000, the value of which is reduced. And see, I'm giving here carrying value of 3,000. So there would be PPE and there would be a debit of accumulated depreciation. So that and all you take care. But PPE 30,000 as a net. And then there would be a gain or loss 75. And then there is 59. Then there would be a gain which will go to SOPL. How much is the gain? This would be the accounting if the control of the asset is transferred. So you de-recognize the asset, okay, and recognize a lease liability and RA. This is what happens if the now how this is accounted. This is what we did in the lessee accounting. Okay, how this is done. Now let's say sometimes what happens is some people are not very sharp. So what they do is control will not be transferred. So control of the asset will not be transferred. In that case, don't de-recognize the asset and do just record as a loan. So if the control is not transferred here, my entry would be bank debit 400,000, 40,000 and credit to a loan liability, which would be 40,000. No need to de-recognize the asset or anything. If the control is not transferred, record it as a loan. It makes sense, right? Because control is still with us. Then why should I do right to use? Control itself, it's a PP only. I should not de-recognize and now put it as ROU. It's not just a right to use. It's a right to control, right to own, right to ownership, everything. Okay. So you have to see whether the control now in question, they don't trick you much. They will tell you in the question whether control is transferred or not. So let's do a question like this. See, Delta sold a property for whatever. They will given the question like this: sale of the property does not constitute the satisfaction of relevant performance obligation under IFRS 15. So you will know when it does not satisfy, it is going to be recorded as a loan. So they will give this. You don't need to go additionally verify the facts and see whether the control is transferred or not. But one thing which we fundamentally need to understand in sale and leaseback is the control of the asset is transferred and then leaseback. Then it needs to be recorded as a proper lease. If the control is not transferred, then it is just a loan, which is substance over form. It's just a loan. I mean, you're still controlling the asset, so it's just a loan. Are you clear regarding sale and leaseback? Perfect. Okay. Now we will do some questions tomorrow, but it's not that hard. No, as in like the interest elements, and you have to go and see the other things like how we did these questions, right? Subsequent recognition questions. It's not that hard. Okay, once you get that, then that is going to be the same thing. But this is the only thing that you have to see whether the control is transferred or not. Now let's go to lessor accounting. I'll again just again it's very simple. You just need to know the funda. Now, lesser accounting is quite easy. What they have said is you have to, in here, you have to see whether there is a finance lease or an operating lease. Now, what makes it a finance lease? There are like 5 conditions. Any one of those conditions, if it satisfies, then it becomes a finance lease. What are the 5 conditions? What are the 5 conditions? I don't recall fully. But the lease term is equal to the useful life of the asset. Okay. There is a purchase option at the end of the lease, and lessee is reasonably certain, lessee is reasonably going to exercise the option. Then what? Come on. I kind of sparked your memory from previous SPR. What are the other things? Finance lease. Present value of lease liability is equal to the fair value of the asset. Right? Almost equal to the fair value of the asset. Then it's a highly specialized asset that the lessee can only use. Then you remember all this? Why do I feel like I'm telling all this for the first time? You remember all this, right? Okay. So if any of these condition is satisfied, then there is there is you can account it as a finance lease. Then there is an indication that it's a finance lease and not an operating lease. Now, how do you do finance lease in lessor accounting? You have to first de-recognize the asset, right? De-recognize the asset because that asset is can't be in your books. In lessee's books, it's a ROU asset, and here lease receivable account, and in the lessor's books, you will do a lease receivable account. What is lease receivable is nothing but present value of future lease income. Okay, and out of which same like how you did that for the lessee, you will every year get a finance income. Okay, lease income, and the receivable will be there. It's a liability. Here the asset would be reduced every year based on whatever is the principal portion. It's the same thing in a new bottle. Okay, so you record whatever is the finance cost that is accounted there. Here it becomes the finance income, and that will go to SOPL. No more depreciation and all. Okay, because the asset is derecognized, and the principal portion would be there. This is how you do a lessor accounting in case it is you don't need to worry about the useful life of the asset, nothing. It's just this particular thing. Okay, lease receivable asset and principal portion you record. This is the only thing that will come. Okay, it's not that hard once you understand the lessee accounting. And if it is an operating lease, how would I account it? Do I de-recognize the asset? You tell me. If I am a lessor, I gave an asset on operating lease. How will the accounting be? Yes. How will a lessor Absolutely. Whatever is the rental income, you will account it. Asset will not be derecognized. Asset would be there. It would be an investment property, maybe. It would be an IAS 40 investment property in my books, and I would be giving it on rent. And whatever rent I receive would be an income. And I'll do depreciation also. So this is going depreciation or fair value as the case may be. Okay. So this is going to be lessor accounting. Again, pretty simple. Okay, fundamentally it is very simple, but what you need to understand or how they will really trick you, conceptually this is all about leases, but how they will really trick you is this. Okay, they will really trick you here. Advance, arrears, mid-year leases. This you need practice. One thing is conceptual understanding. You just go by chronology, my dears. That's the only thing that will save you. But you need practice in this department, lessee accounting, advance arrears, and whatnot, because they will test this. They will test this. And if I see some questions which we have here, okay, we have gamma and omega, which, okay, let's see. Lessor accounting and all, they will not much ask. They'll only ask lessee accounting. But in case if they ask, this is how it is. Okay. So sale and lease back, I see frequently questions coming. It would be a part of a question. You just need to see whether the control is transferred or not. Okay. No, this is PP. See, it would be a small question on sale and lease back. Okay, that's how it will come. Sold a property to entity and on its fair value. The transaction constituted a sale in accordance with IFRS 15. So, the transaction constituted a sale in accordance with IFRS 15. Now you know what to do, right? The carrying amount of property. Whenever you see a sale and lease back, you just first explore whether the control is transferred or not. And according to that, you can do, right? And now you have to do lessee accounting, because they will say, okay, control here what it says, carrying the transaction constituted a sale. So when you say it's a sale, then you have to recognize everything, right? De-recognize the asset, show it as an ROU asset, show the profit on sale, then you do everything. All that you have to do here. Okay. And how many marks are this for? Exhibit 1 is for 12 marks. So you have to write 12 points. 12 points will not be there entirely on sale and lease back. Sale and lease back, 2-3 points. But how do you find the present value of lease liability, ROU asset, all the recognition, everything combined will be 12 marks. Okay. So again, here, right to use asset. Here you have to calculate what is a right to use asset. Okay. What are the things which will go into finding what is the value of right to use asset, and it is 11 marks. Then there are segmental reporting and immaterial. That's okay. But this is how leases will come. It will not be, it may be a full-fledged question also for 25, but most probably it will come as a section question. Okay. And if they want to trick you, they will give this. Mid-year leases. If it is mid-year leases, if you don't understand that fully, so you will be very prone to make mistakes. So that's the only hardest part which can come. Other than that, I would say it's not that hard. The conceptual part of other things are not that hard. Okay. So can we kind of conclude? So are you okay with, initial recognition, how to find whether it's a lease or not a lease? Lessee accounting. Okay. What is initial, subsequent, and presentation, everything. Sale and leaseback, same lessee accounting only. But if it is sale and leaseback, whether you have to see whether the control is transferred or control is not transferred. If control is not transferred, account it as a loan. Don't go to the part of going by a lease at all. If control is transferred, then you say that control is transferred, hence we are locating as a lease, and then you do the lessee accounting. Okay. Lessor accounting, very simple. You have to see whether it's a finance lease or a operating lease. And if it's a finance lease, then I will only have a receivable, lease receivable. I'll de-recognize the asset. But when it is the other part, the operating lease, then I'll keep the asset, and whatever income flows in, I'll show it in SOP. Are you clear with leases? But you need abundant practice, okay, especially on the advance and arrears table. Do a lot of practice, then only you will get it through. Any doubts? Yes. Okay, fantastic. Conceptually, that's all that you need to be there. Now it's all about practice, Melvin. Okay, so you have to do practice, otherwise it's a little difficult to get the speed in the exam. But conceptually, you're there, I feel. Tomorrow, let's take intangible assets and goodwill. What I wanted to tell you is that we are in the right track. Okay, don't worry about whether we will complete or not, because I have everything provisioned here. So we will start our consolidation and revision in a few while. So see, 311 we have completed accounting for leases. Conceptually, I will only be doing conceptually. Then we will have all these. Okay, 2 days I'll be traveling back to UAE, so there would be this, and of course we have everything sorted out. We are all there, so don't worry. And I think it's time for you to practice. Take the time, do the questions on your laptop so that it's easier for you. Okay, so let's wind up for today and see tomorrow with goodwill. Yes, we'll meet tomorrow. Okay. Thank you, guys. See you tomorrow.
Sir,
Yeah.
recording stop